On January the 14th, you would have paid 234 Rand for a Kumba share. Fast forward 7 months, the same share is going to cost you around 90 bucks. The retreat in resources stocks will be further fueled by sharply slowing Chinese economy and declining demand. I'm Bruce Whitfield. This is the MoneyMakers, and tonight I talk to three guys whose job it is to make money despite dwindling resource prices. Adrian Saville, Chief Strategist for Citadel, Bevan Jones from Thebe Investments, and Nick Norman-Smith from Lentus Asset Management. Bevan Jones, I mean, hypothetically, if at some point in January you'd been sitting around the table with a group of guys, a couple of TV cameras, and I'd said to you, what would your stock pick be for 2015? What are the odds you would have said Anglo-American is a sitting duck? What an easy pick. And everybody around, would you have joined everyone else around the table and agreed?
Well, it's easy to say now with hindsight, but probably not. I mean, I would have probably said
who would have done that?
I would have said buy Glencore and sell anything with an iron ore related exposure, like a relative value type trade. Yeah.
Okay, so was it buy Glencore? How much is Glencore down this year?
A lot, but it's also but because it's got the trading element to it, it probably has been able to ride out the dips.
But it just goes to show the curse of making stock picks. I mean, it is absolutely, and gentlemen, so nice to see you again. It's been, what, 7 months?
Lovely to be here.
but Anglo's is, and on all metrics, looked like an absolute winner for 2015. There was no indication that China was slowing down to the extent it would. There was no indication of devaluation of the Chinese currency. There was no indication that commodity prices would fall as sharply as they did, although, Nick Norman-Smith, you did tell us to avoid Kumba.
Yes, that's my small saving grace. Thank heavens for small mercies, but yeah, unfortunately, yeah, I also said buy Anglo, so yeah, I've got nowhere to hide.
But it is the curse, isn't it, of the uncertainty in the global resource environment right now?
Yeah, it's a curse of also looking at fundamental valuations. Often, if something looks cheap, but it can get a heck of a lot cheaper before it turns around, if it does turn around. And I think that's the case here. And we've seen it in our market. The cheap stocks have just got cheaper and cheaper, and the expensive stocks have generally got more and more expensive. We're starting to see some of the expensive stocks, like your Mass Marts and your Coronations, starting to see a bit of reality coming through, and they're starting to push down as well. But broadly speaking, yeah, the resources have just got from cheap to dirt cheap.
But it's because both of you are value investors. Both of you like the principle of looking at valuation and saying this thing is cheap, we can buy it now. Over a period of time, we will make money on it. It might go down a bit first, Adrian Saville. But 5 years from now, yeah, do we look at that Anglo pick and go, yeah, it was actually quite a good pick. It was a bit awkward in 7 months of that conversation we had in TV one evening. But do we look at it 5 years from now and go, nah, it was actually a good call still to have made?
I think so. You know, Anglo's has got a fantastic portfolio of assets. Probably the two trickiest parts right now are the platinum and the iron ore. The iron ore, you've captured the story with Kumba, and the platinum, Anglo Plat is going through an incredibly tough time and trying to figure out how they restructure it. Of course, they haven't had the worst of it. The business that has had the worst of it is by a long stretch Lonmin,
yeah, absolutely.
From a 150 billion market cap to 4 billion.
Yep. Sorry, when were they at 100? 2007 or thereabouts?
Yeah,
they were sitting at 150 billion rand.
They got to 150 billion.
And then a couple of years ago, they raised 8 billion rand.
2012, they recapitalized 8 billion.
And now the total value of the company is 4 billion rand.
4 billion.
That's the massive destruction of value.
Yeah. So if you'd put 100,000 rand into there, you would have 5,000 or so.
It's depressing. And to come back from that.
But, you know, I think one of the aspects of Anglo's that if you are going to stock pick, what Anglo's brings is a portfolio. Yeah. So you're not getting just the Kumba or just the Lonmin impact. But Anglo sits on some fantastic assets, diamonds being the most obvious.
Yeah, but okay, Bevan Jones, let's talk about commodities. I mean, because here you are, somebody who looks at commodities, and yeah, Brent crude is behaving beautifully from a South African perspective. Not great if you're a Sasol shareholder, but for pretty much everything else, Brent crude is doing the right thing. What does the actual commodity space look like? We've seen iron ore prices plummet. There was a bit of a bounce back in July in iron ore, for example, not reflected in the share prices, though.
No, sure. I think iron ore is one of the probably the worst commodities going forward. I mean, because You know, a year ago, your average Chinese taxi driver knew what rebar prices were trading in Shanghai. Secretaries in China were refinancing on their bonds. I mean, there was just a housing market looking for a collapse. The steel sector is completely oversupplied in China. The government's clamping down on emissions. Going forward, recycling of steel and iron ore is going to completely take away, you know, any demand for fresh iron ore. It's not a pretty picture going forward. Things like platinum, where you've got renewables, much more bullish longer term.
But doesn't platinum face the same problem as iron ore ultimately as well, in that there are lots of old exhaust pipes that you can recycle the platinum from, so the auto-catalytic converter
and there's
business
synthetic materials like mullite, for instance, that could
is that what goes on the back of somebody's head? It's a small mullet, it's mullite, yes.
No, but I think there's probably a more fundamental reason, because there's also more uses being found, I think, for catalysts, and as we get into fuel cells, especially hydrogen fuel cells, for instance. Things like graphite, also very interesting on the battery space, and you know, Elon Musk and things. So the commodities are changing. The old commodities like coal and iron ore are no longer as required, but the new commodities where we need renewables and the gas, we're becoming a gas economy. So, you know, even though gas prices are also very low, probably more upside for them versus something like oil and coal in the longer term.
Do you buy those arguments? And if you do, what does it do to identifying investments?
I think it is very specific. So let's talk about platinum versus iron ore. Platinum, the amount of platinum produced every year is utilized every year. Yes, some of that might be through recycling, but we still use it every year. Sure. Compare that, and you can only get platinum in South Africa and in Russia, very concentrated supply. In fact, the third biggest platinum producer in the world is the 4 billion rand market cap Lonmin.
Okay.
So you know, that's how bad the industry is. So if you compare that to iron ore, where all the world's biggest resource companies have got these super low cost supplies that they are pumping out into the market, there is much more supply. Secondly, China has been the big driver of iron ore, and that's in a phase where they're building up. So that's not going to come back as easily as automotive demand is going to be relatively flat. Jewelry demand is going to be relatively flat. It's not going to completely fall away. So just as it ramped up and you saw Kumba with massive margins, it's going to come back down. Platinum's a lot more dull, a lot more boring, but it's going to be required. And if, you know, the second argument is always, but South Africa, it's going to cost too much to pull it out the ground. Well, there's nowhere else to get it. So either the price
react at some point, Adrian Saville.
I think the other point is you could find more efficient ways to mine it, more productive ways. And look no further than the Chilean copper mines, where truck drivers are earning $70,000 a year. That's not outrageous wages, that's extraordinary productivity facilitated through mechanization. It surprises me that the South African platinum industry has essentially sat and watched, because if there is ever a case for cartelization, this is a great place to go, where they could
in the same way as De Beers strangled the global diamond industry by sitting on diamonds, and I saw a report the other day, there was even talk of dumping diamonds in the ocean to limit supply.
Yeah. So maybe we need to revisit my diamond story in a moment.
Whereabout were they dumping?
I'm not telling you. But if I'm not here next week, you know why.
You know, put price fixing aside, or price management aside, you could actually put in a mechanism as simple and elegant as a stabilization fund. And that would allow you to provide some degree of stability to this industry that is just being whipsawed.
Which two sectors should these guys be looking at in terms of investability, in terms of commodities? Is platinum worth investing, or should we be going into the world and keep maintaining the Anglos on De Beers?
I would be investing in platinum, possibly even gold. I don't really even buy the whole Bitcoin alternative currency thing, and so I think gold has got some role to play in a shaky economy, and we're kind of heading into shaky economy territory with interest rates rising, potential for stock price.
But you buy the physical gold, you wouldn't buy the gold shares?
I don't know. I think I would probably look at the gold shares because of the dollar rand. I mean, you obviously get the benefit there, the kicker.
If I say a gold share, will you call me back?
Of course.
In fact, we might have mentioned this at the start of the year, that I think the
gold mine. I've got Anglo as
I think the gold operator to look at in South Africa is Pan Africa Resources.
But you've always like Pan African Resources,
yeah,
the Barberton-based guys,
exactly.
the old mines, those guys. Yeah,
yeah, they've got access to low yield. They're slowly diversifying the portfolio. They really understand the ore bodies. It's well operated.
Okay.
My concern with gold is the amount of gold that's mined every year compared to how much is sitting in vaults. It's too difficult for me to understand what the pricing fundamentals are.
You don't have to understand the pricing fundamentals.
Platinum is very simple. This amount comes out, there's a marginal cost of production. If the price goes below there, people stop producing, the price has to go up. With gold, there's gold sitting in central bank vaults. So it's about people speculating on Bitcoin and who I can sell it to tomorrow at a higher price. That's not something I can. Yeah, no. I mean, yeah. So it's there's a massive hatred towards the mines. So I would eventually say if you had to pick the two, you probably go for the mines versus the metal, just because they've been sold off.
And I think gold is an interest rate play. There's obviously a strong negative correlation to interest rates, and it's a central bank play, and there's lending and etc. But I think in a high inflation environment, you're going to start seeing gold coming back. But we're a long way from a high inflation environment.
Are you in the mood to test the commitment of our two stock pickers this evening, Bevan? Are you in the mood? Are you in the mood?
Go for it.
Okay, I think we should test their commitment. So beginning of this year, gentlemen, about I think it was 200 rand a share. Both of you identified Anglo-American as a stock pick. Down to 150 or thereabouts, some days up to 160. Do you want to top up? Do you want to add to your Anglo holdings, these fictitious holdings?
I'm going to go with Bevan in that for the foreseeable future, especially given the extent of the Chinese slowdown. And I don't think we've seen the true numbers yet. China is going slower still. And in the absence of a replacement, that erosion on prices will stay in place. So I would add to my Anglos a trading capability. If you let me top up, I'll add some Glencore to my Anglos holding.
I just want to know
or I must double down.
Are you doubling down on Anglos?
I'll take some more Anglos.
You'll take some more Anglos?
Yeah.
Okay, all right. Yeah. So that's a brave bet, but we like brave bets. We'll see you in 6 months' time.
Unfortunately, our holdings aren't fictitious, they're real. Yeah, no, we're still holding it. I mean,
you're still holding it, but are you adding as the price is falling?
Yes, we have. We're close to being... We do have risk mitigation limits, so given the quality, we do admit that these cyclical resource companies are not great quality companies. Much rather own a software business that can reinvest capital in at great things. But unfortunately, the pricing fundamentals aren't there. So not great quality. Therefore, we're going to limit how much you put of Anglos in the portfolio. But absolutely, we still believe that it's, especially in a market like ours, it's one of the more attractive price to value opportunities.
And I think they've got residual income coming in from coal. So coal's been beaten down as well massively. But they've got huge dumps sitting in Witbank area. And now with the coal IPPs, those dumps can be reprocessed and they can actually earn a fairly decent price for it. So, you know, they're not just beholden to the export market where the prices collapse. They've also got Eskom, who's paying a fairly decent price. So there's residual income coming through. What I don't like is they seem to want to sell their copper assets to some UK fund. And I think copper's got a very bright future.
Yeah.
I mean, there's
copper's coming under pressure at the moment as well, copper prices.
It is, and a lot of people see it as a leading indicator of commodity. But it should come into a supply deficit in the next not too distant future. And the curve has gone into contango. So it's looking
Which feeds into the Anglo story.
Yeah.
But
they must possibly try and just get rid of the iron ore in Brazil.
Adrian Saville, Chief Strategist for Citadel, Bevan Jones from Thebe Investments, and Nick Norman-Smith from Lentus Asset Management. Adding to Anglo's exposure will bring you ways of making money through plummeting stock prices. Hopefully they don't plummet for much longer. For now, good night.